Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. This is IndianOpen. I'm Neeraj Shah and hope everybody's back after a really nice festive Christmas vacation.
Absolutely. It was a nice long weekend. And
yeah, that's why I call it a vacation. We don't get a 3-day weekend.
And we've got a holiday week ahead, but still there's news to get through. Good morning, everyone. These are our headlines. It's a muted start to the last week of the year. Thin volumes in Asia, markets in Australia and Hong Kong remain shut. No Christmas cheer for Bitcoin, which continues to extend its slide, failing to reverse the worst sell-off in more than 2 years. Indian Oil Corporation and Bharat Petroleum show interest in acquiring the government stake in Gas Authority of India Limited, but the gas utility wants to merge with ONGC instead. Vijay Rupani will take oath as Gujarat's Chief Minister for the second time today.
Well, let's take a look at the trade setup for the day. I think the headline said it all. Volumes are thin, a bunch of markets are shut, and while there might be an odd market which might be trading, the likes of Hang Seng, for example, which is up about 0.75% at least as per the tick, broadly, the Asian markets are showing a flattish start to trade today. The SGX Nifty too, about 22 odd points down at right now. But I don't think that's any indication of what the markets will do during the course of the day or for the week. Now remember, it is expiry week and we closed in at all-time high levels. The probability is that we'll consolidate at these high levels. We've had a good run. The VIX has come off quite considerably, and there is every possibility that this low VIX, while there is expiry week and there could be some uptick to India VIX, but this low VIX regime that we've been in post this Gujarat election verdict coming out might stay, and that might only help the markets not really fall off too much. We are anyways at all-time highs. You don't want another 200, I mean, you don't mind if there is not a move of another 200, 250 odd points because people are happy at these levels. The question mark only is whether we'll be correct quite significantly in the run-up to this expiry. The probable answer is no, but you never know. It is expiry week, and therefore it'll be interesting to see what happens. If you look at the options data though, most of the options data seems to suggest that most people are betting on either to eat the premium or to indeed bet on a floor, 10,400 to 10,500 in particular. So that remains the interesting pivots around which the markets could move. Infra stocks could well continue in the momentum, and we'll tell you why as well. But a bunch of companies have gotten orders over the weekend as well. So let's wait and watch if indeed the Nifty Infra Index continues to rise and shine. It doesn't have a dramatic impact on the index per se, but it's quite a bit of an impact on the broader market sentiment, which is also fairly important. However, what about specific stocks in today's session? I thought while it's a muted day of trade, there are 3 or 4 which stood out. Now, United Breweries could be interesting because Maharashtra is amongst the first states, or amongst the states, which has hiked the beer MRP up to 5 times the production cost. It was anyways high, it was 4 or 4.2. They've hiked it to 5. Now, none of the other distilleries really have a large presence in Maharashtra, the likes of Som or some of the others. But United Breweries could be an interesting one in trade today. Let's wait and watch. It may not have a dramatic impact on business for a lot of others, but sentimentally, it's a positive. Amongst brokerages which have initiated coverage, a lot of, remember brokerages are also on a holiday, but a lot of them have been at par with the current market price. But I thought Motilal on NHPC was interesting. They've initiated coverage with a buy rating. The target price is 30, which is about a potential upside from that price. So that is something you need to watch out for. NBCC, you don't quite know what kind of reaction would this evoke in the stock, but the NBCC chairman and CBI has filed corruption charges against him. So it'll be interesting to see if indeed the stock reacts or not. And I was talking about infra companies getting orders. L&T's gotten an order as well. The Delhi Expo Center Phase 1 contract for about 2,800 crores. It's a large order, maybe not dramatically large to move the needle on L&T stock, but a large order nevertheless. Let's wait and watch and see if L&T does react in the session today.
All right, that's the trade setup this Tuesday morning. But what are we picking up on in terms of discussions? We've got GAIL, that Gas Authority of India Limited. It seems like it's got 2 suitors, or the one suitor that's approaching it and another suitor that it may be approaching. So who will win the race between BPCL and IOC, which wants to put in a bid for GAIL, and GAIL, which wants to perhaps merge with ONGC? We'll look up the various scenarios to see which one makes most sense. Road construction companies have been on a roll last week. This as the government makes a scramble to meet its targets. Is that upside in these stocks justified? Neeraj has that analysis analysis, and as 2017 draws to a close, we take a look at what the G3 central banks are expected to do over 2018. We will get you that chat a little later in the show as well.
The first up, two state-run oil marketing companies are keen to buy out the government's stake in Gas Authority of India Limited. So the headline has already given you all that you need to know. Let's get in Yatin to talk about what does this mean for GAIL, who are the potential suitors, or which is it that GAIL is seeking suit from as well. Yatin, good morning.
Good morning, Neeraj. Of course, this is something in line with what the finance minister had earlier indicated in the budget speech, that the integration of oil marketing companies and oil producing companies is something that the government will be looking at moving forward. And now what a PTI report indicates that both IOC and BPCL independently or separately have given proposals to the oil ministry regarding an acquisition of GAIL. Remember, the government stake in GAIL is valued at close to 46,700 crores, and we have IOC and BPCL. These are the two oil marketing companies which are looking to acquire GAIL. Of course, this will benefit them in terms of marketing and distributing, and entering into the city gas distribution, something like what GAIL is doing. Of course, they have a very large institutional business as well. Of course, what we also understand that GAIL, on the other hand, believes that a merger with ONGC is something that they will be looking forward to, since ONGC is a gas producer and GAIL is a gas distribution. It makes sense on the integration front for GAIL to be acquired by ONGC, which is in turn looking to buy a strategic stake in HPCL, which is the Government of India stake. Of course, the deal or the transaction is in very preliminary stage. These are the proposals which have been sent to the ministry, not yet been approved. So probably we could see some reaction coming in as far as GAIL is concerned, because we have multiple companies which are looking to get merged or looking to acquire government's stake in Gas Authority. So that is something interesting that we'll be watching out for throughout the day. Of course, the government is yet to take any formal decision as far as the entire transaction is concerned.
Needless to say, I think we have no idea about what the possible timelines could be as well.
Yeah, so in terms of timeline, since I was mentioning, there is no formal proposal which has been given. Of course, these are the oil marketing companies which have approached the oil ministry with various proposals. But GAIL is something interesting you need to watch out for, because the stock has appreciated nearly 50% on a YTD basis and 60% on a one-year basis. And if you look at the valuations compared to the oil marketing companies, probably trading double those valuations. So GAIL typically is trading a little over 24 times 1 year forward earnings. So on that front, how comfortable is the valuation? How keen is the government to dispose of the stake is something that will determine the timelines of the entire transaction.
I just have one question, Yatin, and ONG, I'm trying to figure out how easy would it be for a transaction to culminate with ONGC, considering an impending transaction that ONGC is already working with, and therefore would that make the road for IOC as well as BPCL, which are keen to acquire this stake, a lot more easier? And anything that analysts have spoken to you about?
Neeraj, you rightly mentioned, so even if GAIL is willing for a merger or a transaction with ONGC, it will be very difficult for ONGC to really look at it from an acquisition point, because HPCL's transaction, which is in advanced stages, ONGC will have to shell out a substantial amount of money for that transaction, which is basically to buy out the government stake. And if now it makes more sense for ONGC to get into GAIL, they will have to shell another 50,000 crores to acquire GAIL. Probably the balance sheet won't support that kind of a large amount. Probably the only case wherein you could see something happening with ONGC would be a share swap or a share merger, which will be a non-cash deal primarily. But talking about IOC and BPCL, probably these would be the front runners as of now as far as the government stake acquisition is concerned for Gas Authority of India. Of course, the analysts do believe that this was something which was already anticipated, because we had the government which has already announced the integration of oil companies in India. So probably after HPCL, GAIL was something which was already hinted enough in the media and also by the government.
That's interesting. Okay, let's wait and watch what happens here. Thanks a lot for that, Yatin. I don't know what way GAIL shareholders will be thinking about this. If indeed a merger with ONGC is the way ahead, you don't quite know what would happen to GAIL. Remember, while all stocks have oil all stocks in this space, the oil PSUs or oil gas companies, non-OMC companies have gained. GAIL has quite been the star. Look at ONGC this year, just about 1% gain, and it's not the stock was trading at substantially high valuations. So it's gained about 1% despite not being trading at all-time highs. GAIL, on the other hand, has just had a fabulous move, 52 odd percent. You don't quite know what way the market verdict on this would be if indeed it were to be seen, it were to be announced that GAIL would actually merge with ONGC. I don't know how would shareholders take it. But I tell you what, shareholders of road construction companies have been a happy lot the past 1 week, or probably the past 1 year. It's been a fabulous move, especially for the EPC companies. And I just thought to point out a few things, especially with regards to the small companies era, because a lot of talk about how Bharatmala and what it means for the mid-sized construction firms, and which is why this whole move of what the stocks have done, what the street is thinking about them, and then their order book to the annual revenue ratio becomes very, very important. Firstly, the stock price moves. Just bring up what these stocks have done. I've chosen 6 stocks. This is not an exhaustive list, but I've chosen 6 stocks, and you will see most of them had a really good up move. Whether or not you can make out which stock is which, KNR, Gayatri Projects, Sadbhav, NCC, HCC, Dilip Buildcon, all of these have had a really, really good move. Now look at what their order book is compared to what their estimated full year sales for FY18 are. And that table will now come up on your screen. So KNR order book currently at 3,600 crores, FY18 sales at about 2,000 crores. You'd believe that's a healthy book to bill ratio. Look at Gayatri Projects, 12,000 crores, and they won a 2,000 crore order, to which the management told us last week that current order book now stood at 14,000 crores versus FY18 expected sales of 2,800 crores. Similarly for Sadbhav, they keep on winning orders consistently, 7,500 crores versus the FY18 sales expected about 5,000 crores. Look at some of the others, NCC and HCC, the order books are northwards of 20,000 crores apiece. The revenues are sub 7,500, NCC 7.5, HCC not even that much. And Dilip Buildcon is the 6th one, which I've chosen, 14,200 crores. They recently won an order over the weekend as well. And the estimated FY18 sales at about 4,500 crores. Now I'll tell you why this is important, but I just also want to show you what the street is right now factoring into all of these stocks before I get to why is it that this order book to bill ratio is very, very important. Firstly, look at what the street verdict is. Almost everybody on the street is bullish on all of these mid-sized construction names. That's KNR Construction, just 1 sell recommendation, 21 buy recommendations. Look at that blue on the screen. Gayatri Projects, 1 buy, 3 hold as per the Bloomberg terminal, no sells. Sadbhav Engineering, 28 buy calls, not a single sell call. NCC, 18 buy calls, not a single sell call. HCC, probably one of the few which has got 1 sell call but 5 buy calls still, and which is quite strong. And Dilip Buildcon, it's been the darling really in the last few months in the construction space. 12 buy calls, just a single sell call. Now the street verdict is very bullish on these. However, we need to keep in mind that one, this order book to bill ratio, the order book versus the annual revenue ratio for most of these construction companies is heavily skewed in favor of the order book. They have a 2.5 year, 3 year kind of horizon. The question mark only is that whether their balance sheets can take more orders considering the kind of order book that they are sitting in. Now Deutsche came out with this very interesting note on the Bharatmala project on infrastructure by and large, but I've specifically picked out the bits on Bharatmala. And firstly, what they are saying about Bharatmala is that the targets are being revamped to achieve a much higher 10,000 kilometers road project size. Contract sizes are being revised as well, and land acquisition process is being expedited. But what does this mean for the small construction firms? I would say not too much. And the reason is because there are 2 or 3 factors out here. Korean companies, these orders are large orders. The Bharatmala orders that will be given out will be large orders. Korean companies can participate directly. Chinese companies may be allowed with a domestic partner as well. And the smaller companies may have working capital and balance sheet constraints. You've already seen the size of the order book versus what they'll do in the annual revenues. It'll be difficult to assume that these companies will then be able to take another 5,000, 10,000 crores worth of orders over the course of the next 6 odd months, because their order books are anyways fairly high. That is not to say they can't or they will not, maybe they will, but just difficult to assume that a smaller balance sheet will be able to absorb such a high order bid that will come in from the as will come in from the Bharatmala project as well. And therefore, most people believe that bigger companies like Larsen & Toubro and some of the unlisted ones as well could benefit disproportionately. I'll just end this chat by one chart that I saw. I'm not bringing it up, it's a confusing chart, but the same Deutsche report had this information about the quantum of order inflows that the state of Maharashtra alone is giving out in addition to Bharatmala, and I think that number, Ida, was 1.6 trillion or thereabouts. Look at the Mumbai Panvel Coastal Way, the metro projects, etc. So aside of Bharatmala, there is just so much on the plate of the builders already that it will be wrong to assume that Bharatmala will add substantially to the kitty of the smaller mid-sized construction companies. Those orders could well go to some of the larger ones, but all of them seem to be in a sweet spot.
Right, but interesting sort of dichotomy playing out between, what is expected to be ordered out and what is actually getting implemented. I think we've got a story on our website this morning as well, talking about the fact that actual pace of implementation on road orders is perhaps not that great. But yeah, that road construction, certainly I think from everybody we've spoken to, one pocket that investors are looking at. If you shift the focus from what's happening domestically to what's happening globally, I think a bunch of conversations that we've had over the last few weeks suggest that a lot of investors are very closely watching what happens to the global central banking outlook in 2018. So we thought we'd try and put together what is happening over a period of 3 odd days in the central banking community. We'll start today with the G3 central banks. That's the US Federal Reserve, the ECB, and the Bank of Japan. Those are the three which will sort of determine the way liquidity pans out for emerging markets as well. We'll start with the Fed. Now, the Fed, of course, as you all know, has been normalizing over the course of 2017. And 2018 is expected to gain pace in terms of normalization. The Fed, unlike other central banks, gives you fairly clear visibility on where they see their benchmark Fed funds rate go. So as you can see with this dot plot which comes out with the Fed Reserve meetings, most are expecting about 3 rate hikes in 2018. That would take the benchmark Fed funds rate to about 225 from current 150. Now the market seems to be pricing in about 2. Some are saying you could get as much as 4. So there is a bit of a dichotomy, and somewhere along the course of 2018 you'll probably see markets make an adjustment to that expectation of 3 rate hikes maybe, unless of course inflation continues to underperform. Remember, this normalization in Fed's interest rates has happened even though you have not seen inflation hit that 2% mark. You have been underperforming that, but central bankers, at least so far, don't seem to be particularly worried. If you look at what the median expectation for the Fed funds rate over the next few years is, so at 2018 end, the median expectation is about 2.1%, so 225, if you take those 3 rates into account. For 2019, the median expectation is 2.7. For 2020, it's about 3.1. So what you're looking at is a period, about a 4-year period of normalization in interest rates from the Fed. Now, all of this assumes that there is no accident on the growth front, which allows the central bank to continue normalizing its policy rate. And it's also been pointed out that if the Fed rate normalizes at the pace that is being expected, it would be one of the quickest normalizations over a period of time for the US Federal Reserve. That's on the interest rate front. I think a lot more attention is focused on what happens on the Fed's balance sheet, which has expanded considerably in the post-crisis years. And you will see the Fed balance sheet. I don't think this is the right chart. So let's go across to what is expected in terms of the changes on the Fed balance sheet. So remember, we were doing about 10 billion starting January. We'll do 20 billion in reduction on the balance sheet in terms of what they allow to roll off. So that will go to about 20 billion. It keeps adding 10 billion every quarter. So by the end of 2018, you would go to about a 50 billion. Now that is what people are focused on, because that means that the incremental liquidity that is coming into the market will continue to reduce. And by the end of 2018, unless something changes, you will see assets being rolled off at a pace about 50 billion by the end of next year. So that is the main sort of focus in terms of the liquidity impact. Now you look at what's happening on the other central banks and you put it all together to try and understand why there is a little bit of a question mark on what liquidity conditions will look like next year. Now the ECB is not going to start rolling off its balance sheet, but it is going to start reducing the pace at which it is buying. So bond buying, which is at 60 billion, comes down into half at 30 billion in 2018. They will continue their bond purchases till 2018 and beyond. In fact, there were fairly dovish statements that came from the ECB chief when he talked about the halving halving of bond purchases. He said, we will continue till it's required. We will continue to reinvest proceeds for an extended period, and benchmark interest rates remain unchanged at 0%, again, seemingly for an extended period. But just the fact that the pace of bond purchases is coming down from the ECB at the same time as the Fed is starting to roll off some of its balance sheet probably has some implication for liquidity. Now, a lot of people are banking on the fact that there will be no change from the Bank of Japan, and that may be the balancing factor in terms of global liquidity conditions, because the expectation, and this is a Bloomberg survey, the expectation is that the Bank of Japan would continue to increase bond holdings by about 44 trillion yen in 2018, but even that is lower than what is expected, what happened in 2017. So until about November, they bought about 61 trillion yen. Again, this is Bloomberg. So, the pace at which they are buying could perhaps change and lower. But remember, in Bank of Japan's case, it is not the quantum that they target. It is the yield on their 10-year note that they target. At present, they expect, or they want to maintain it near zero. So they're buying at a pace which is conducive with that. But over 1/3 of the respondents in the Bloomberg survey said they expect the 10-year target yield to rise in 2018. So they're saying at some point during the year, maybe Bank of Japan would say that we are no longer targeting a zero yield. We are targeting a 25 basis point yield or something. Still, I mean, ridiculously low, but a change. Neeraj, that is, I think, perhaps what I think we were having a chat with Bharat Iyer on Friday, and that is what he was referring to, that the pace of normalization in central banking, which we had seen already start in 2017, will gain pace in 2018. And then the question is how the markets respond to it. I think that's anybody's guess. How they respond to it is anybody's guess, but it will be a crucial determinant.
And, Ida, just to follow up on that would be that while, and I think Bharat pointed out that even if you look at equity holdings, the quantum of holdings that is held by foreign institutional investors vis-a-vis domestics is just so skewed out there. But the bond markets particularly could be impacted, you guess, if indeed these are the numbers that we're talking about, and closer to 2018 when the numbers move up so dramatically, it will be an event that we haven't seen or been used to for a while now.
So actually, it's, bonds are a little confusing right now, because I'll say that for two reasons. One, of course, yields are moving up in our country as well. So if there are foreign investors who are playing on the yield differential, there's still enough incentive for them to come in. And if you actually look at the December month of fund flows, interestingly, while bonds have sold off and yields have gone up, the flows into the bond market from the foreign investor side have remained positive. Okay. So there is perhaps some reason to believe that the foreign investors are continuing to play on the coupon, on the yield differential, rather than the change in prices. I think it is certainly going to determine if there is, a sudden sharp yield in increase in US yields, it will determine flows into emerging markets. But then if equity markets, are skewed in favor of FIs, with domestics now starting to play catch up, it's the reverse for the bond markets, right? Our bond markets are very heavily driven by what the Indian banks are going to do. Yes, foreign investors have more and more started to determine sentiment to an extent. So we'll see how it plays out. But I think, a lot will depend on the US yield curve, a lot will depend on the dollar, and, that will perhaps respond to any unanticipated changes. So everything we've put out here is the known. So what is the unknown? I guess that's the big question mark as we go into 2018.
Yeah, it promises to be an interesting year for sure. Okay. Thanks a lot for that, Ida. So that's an interesting analysis, and I'm sure some of it will come up on the website as well. But that's all that we have on First Word today. But stay tuned, because we'll discuss a lot of things with a bunch of our market experts, and hear out from Sunil Singhania as well. But more importantly, on the corporate corner, Tech Mahindra's Mission 343 with Managing Director CP Gurnani, and Tata Global Beverages new launches in 2018 with MD and CEO Ajoy Misra. However, for now, full tilt towards the day's trade. Let's take a look at the derivative space. Agam Wakili standing by with the FNO setup. Agam, good morning.
Good morning, Neeraj. We are entering into expiry week, the final expiry of 2017, and what we are witnessing is a little bit of unwinding when it comes to the benchmark indices. So starting off with the Nifty futures, as you can see, about 2.4% shed there, with the underlying moving up by as much as 0.5%, just shy of the 10,500 mark. When it comes to the Nifty Bank as well, again, it's quite similar. We have seen just about a 0.4% increase as far as underlying is concerned. But moving in, what does this mean for the volatility index? That has fallen off, now firmly below the mark of 12. So we have seen it come off by as much as 4%, but the Nifty put call ratio on the other hand has moved up, now at around 1.59 as against 1.48. Moving in terms of the way we've seen changes in open interest across options, what we've seen is unwinding the 10,400 and 10,500 calls last Friday, and more writing in the 10,500 puts. So this is an interesting level to watch out for. But we have plenty of stocks which have moved out of the F&O ban. So we will have normal trade resume for the likes of HDIL, Jet Airways, as well as JSW Energy. Watch out for VGuard, because we've seen a substantial increase in open interest towards fresh longs. We're about near 15% OI there. And we're also looking at Mindtree, which has also moved up as much as 4% in terms of underlying, and another 11% added as far as open interest is concerned towards fresh longs as well. So these are some of the stocks that I will watch out for as we move into today's day of trade.
Okay, Agam, many thanks for that. Now, you know, we'll probably try and connect with Abhijit Phatak. He should be joining us any moment. But let me just read out his ideas for the benefit of our viewers who tune in to hear out what he has to say. Amongst other things, on the index, Abhijit believes that there is resistance that the index has near the 10,520 and the 540 spot. And his call for the day is to go out and short the 10,500 call option near 50 with a stop loss of 60. So be careful of those, or be mindful of those levels. It's expiry week. There could be volatility, but one can go on short the 10,500 call option. A stop is above 60. Keep that in mind. And among stock calls, he's going out and going long on Reliance Industries. Stop is sub 910. The target is 925 and 935. Of course, he recommends that you should buy a Reliance Industries only at the levels of about 915. So it's a tight stop that he's recommending. Okay, I think we do have Abhijit. Let me just, while I've given out his Reliance call, let me just ask him for his index view as well. Abhijit, it's expiry week and therefore becomes important. Good morning. I read your call out. I believe you think that there is resistance that we have at slightly higher levels.
Yes, Neeraj, good morning. I can see resistance from the 10,500 call, and unless that is crossing 50 and 60 decisively, it can give a dip towards 10,450 once before expiry. So one has to be very careful near when the 10,500 call goes near 50 and 60, and maybe even short it with a stop loss above 60.
Okay, and you would recommend going short on the 10,500 call option only at that 50 mark, not otherwise.
Yes, because the stop loss is just about 60, so shorting it at a lower level will not make sense because the risk-reward ratio will not be quite good. So it needs to be shorted only when the risk is very less.
Okay, Abhijit, one more question, not strictly from the F&O space, but more so from an active pocket last week. The construction companies were all up and about. Any stock that fits the bill there? They've also, some of the companies like L&T have also gotten an order over the weekend.
L&T has been stuck in a range of 1180 to 1260, and unless it closes a month above 1260, I would be cautious in buying it. But the moment L&T closes about 1260 on a monthly basis, that will be a very big breakout, and it can go by 100, 150 rupees very fast. But then it has to close about 1260, 1270 on a monthly basis.
My last question to you, Abhijit. I think you too, if I'm not wrong, and please correct me if I'm wrong, but you too had recommended going long on a Bajaj Finance at lower levels. It's rallied quite a bit from those lows. Is it time to book profits if you had taken a long call a few days earlier?
No, not actually. Bajaj Finance can still be held with the stop loss of 1740, and it can even cross 1800 in the coming days. 1740 and hold the longs.
Okay. And while I've given out your call on Reliance, Abhijit, my last question for the day. While I've given out your call on Reliance, would you reiterate it? What are the levels that people should watch out for?
Yeah, as long as Reliance is above 910 futures, it can go up toward 925, 935. So with a stop loss below 910 on the futures, and if one can buy it near 915, that is a good risk to take, about 7 rupees. And it can go toward 925, maybe even 935 once before expiry.
Okay. We'll leave it at that, Abhijit. Many thanks for joining us today and giving us that perspective. That's Abhijit Phatak with the FNO calls for the morning. A clutch of other names in focus as well, and we'll talk about all of those. A lot of winners in Friday's session, as you would have guessed, because markets did touch all-time highs close to the market close. But it's not just the equity markets that we speak about. Also address the commodity markets. Pradeep Pandya Johnson with those details and to take the show forward. Good morning, Pradeep.
Good morning, Neeraj. So till Friday, the momentum was intact. But if you look at this morning, in Chinese trade, at least the metals are not doing that well. But we'll start with gold. The gold rose for 6th straight session and it has reached 2.5-week high. Silver also added 1.5% to around 1635. Palladium has also jumped to 17 years high on Friday. So precious metals have remained in focus, and looks like probably flows are shifting from Bitcoin to precious metal, and all these metals have definitely gained because of that. If you look at oil, it's also holding up. Although the kind of news flows which are coming in, US drillers have kind of stopped adding more rigs. So that's an important data point that kind of supports the market. On the other side, there is further update on the Fortis pipeline, and looks like the maintenance is at advanced stage, and as company promised last week, they'll be able to start supplying through this pipeline in early January. So market is also watching out for that, and that kind of caps the prices. So that's why we get a very, very tight range in oil. Industrial metals, as I mentioned earlier, are soft in Shanghai. Aluminium has fallen by most actually from the 2 weeks high. So the correction of around 2% has come on the back of addition to the stockpile. So if you look at the China's aluminium ingot stockpiles, they've risen by around 1.75 million tons on Monday. Nickel has also fallen by 0.5%. Copper is trading more or less flat, close to 2 months high. Zinc was also marginally higher, gained by around 0.25%. In fact, iron ore has also fallen by around 2.5 to 3%, and that is because on the ports, the mainland ports, the inventory has increased by 2%, almost 2% over last week, and this is the biggest gain since October and at a record level. So looks like there is a little supply glut building in China in base metal and also iron ore.
Okay. So that's essentially what's happening in the commodity space. A quick check for the benefit of our viewers who are tuning in right now as to what's happening in the Asian markets. Flattish trade by and large. The SGX Nifty 2 indicating a bit of a move. So do watch out for those stocks as well. Amongst other things, and we'll be joined by our guest in moments from now. Our research team should also be joining us in just moments from now to talk about all the key stocks and news. But Pradeep, amongst the key stocks to watch, I mean, aside of course, the newsmakers, and NBCC could be an interesting one today, or maybe United Breweries could be an interesting one today. But very keen to see what happens to some stocks which started moving around last week. So one of the construction firms, Dilip Buildcon and HCC and the others moved. I think Adani Transmission and Reliance Infrastructure have had a fabulous move. And the specialty chemical companies, maybe led by Aarti because of that buyback, but Aarti Industries, Navin Fluorine, etc., have had a really good move.
Yeah, and if you look at it, over last 2 sessions, there is a lot has happened on the corporate front. So there are acquisitions, restructuring, several announcements have come in. Also order flows, as you mentioned, for several mid-cap as well as large-cap companies. So it would be interesting to see how markets would really react to that. And our research team will join us shortly to give us more details on that, and we'll definitely discuss all these stocks in detail after that. So looks like, while index is all set to take a pause, and as we discussed on Friday as well, 10,500 is a very, very important level, and it won't be easy for Nifty to cross it and stay above that. I think if we give expiry above 10,500, that will probably finally signal us that okay, now bears have made up their mind that this level is not defensible. Otherwise, I think action will continue in mid-cap and small-cap space, and all these stocks, as I mentioned. So let's go across to our research team and find out what are all these stocks that are in news, where there are developments or reports. Doesn't look like analysts were really working over the Christmas weekend, so there are not many reports to talk about, Shraddha, but a strong news flow.
Yeah, lots of stocks and strong order inflows. So we might see a couple of companies reacting on the back of that. Starting off with BHEL, they've got an order worth 672 crores from Indian Railways. Not a very big one, but you might see some reaction there. L&T, which has received a Delhi Expo Center Phase 1 contract for close to 2,800 crores. And Welspun Corp has received an order for the supply of 1.24 lakh metric tons of pipes, so we could see some reaction there as well. You also have the government which extended the anti-dumping duty on phthalic anhydride originating from a couple of Asian countries and Israel, so you could see Thirumalai Chemicals and IG Petrochemicals gaining on the back of that move. You have a Mint report which suggests that Cummins Group is in talks to acquire Kirloskar Oil Engines, at least a controlling stake in the company for close to $500 million. So this news flow could keep Kirloskar Oil Engines active. And on the back of bulk deals, you had Lokesh Machines where Shmita Ashish Kacholia sold 0.7% stake in the company. Now this company has a market cap of close to 120 crores and the stock was up 3.5% or so on Friday. So we might see some negative reaction come in on Lokesh Machines.
Okay. Well, Saloni, if you look at it, there are several deals, corporate developments taking place.
Absolutely. So following other stocks and news, we'll be looking at Tata Power. Now the company has one mining license project in Far East Russia for $4.7 million. Now the company said that they will deploy thermal coal reserves in its Mundra and Trombay facilities. We also have EID Perry and Coromandel, which will be in focus. Now EID Perry will hive off its biopesticides business to Coromandel International on a slump sale basis for rupees 338 crore. Now remember, Coromandel is a subsidiary of EID Perry and the acquisition will be completed by next year. Now next up we have GVK Power. Its subsidiary has won bids worth over 17 lakh tons of coal from Coal India. Now the company said that they will execute a fuel supply agreement after submitting all the required documents. Now Tech Mahindra will be in focus. The company has acquired an additional 32% stake in Comviva Technologies for a sum of rupees 328 crore. Moving on to Prakash Industries, some positive reaction could be seen here after SEBI revoked the shell company status on Prakash Industries. And lastly, we have Suzlon, which will be in focus in trade today after the company signed a pact with Skyron to sell two subsidiaries for a consideration of rupees 280 crore.
Okay, thanks a lot, Saloni and Shraddha, for all these updates, and we'll be eyeing all these mid-cap stocks. Mayuresh Joshi joins us now on the show. Mayuresh, Suzlon, first of all, what's your view on this stock? It's stuck at lower levels, not really moving. Will this development really help?
No, so I think short-term moves, Pradeep, not ruled out for the stock. But largely, I think the price discovery, specifically in the recent Gujarat auctions, are not a very encouraging sign. Secondly, I think in terms of core reporting, it is going through the worst slump of its lifetime. So largely, I think it will take time for earnings to recover. The earnings have shown a reasonable amount of recovery. My own sense is that for a decent re-rating in the stock, it is still a few quarters away, because consistency in numbers is something that the street would ideally like to see. So I think I'll better be looking at other mid-caps from other areas rather than Suzlon at this point of time.
Mayuresh, good morning and thanks so much for joining in. Festive greetings to you and your team. Just wondering, would NBCC have any kind of a major reaction? It is an inquiry against the sitting chairman. Does that really damage the momentum in the stock?
Well, it does again, and I think that creates an overhang. So from a sentimental impact, absolutely yes. And yes, season's greetings to you, Neeraj, Pradeep, your whole team. You're doing a fabulous job. So largely again, what really happens in terms of core fundamentals and reporting of numbers, I think the order book is not a concern at all. The kind of execution, the margins on the PMC side will all probably hold up because of the strong order book that it has got. But largely, I think this news can be a dampening sentimental negative factor for the stock from a short-term perspective.
So what would you do, Mayuresh? Let's assume the worst case happens with the inquiry from the CMD's perspective. Does it provide an entry opportunity into what is a robust business model? How would you approach this event?
So yes, I think if something actually, and then again a precondition on what actually happens over the next few weeks or months, but there is nothing wrong with the business model per se. And as I said, I think with the kind of returns, both in terms of ROEs, ROCs, a very strong balance sheet, I think the core ingredients that one probably needs for this business are probably there. But does this probably give a correction into the stock, because the run-up has been quite humongous? Valuations probably also looking a little bit far stretched at this point of time. Yes, but I think one really needs to wait and watch to see how the progress actually happens over the next few weeks. But a damping effect is not ruled out. But yes, I think a significant correction does give an entry point for long-term investors.
Continuing with PSUs, Mayuresh, what's your view on GAIL? As reports suggest that two OMCs, IOC and BPCL, are interested in acquiring the company, but company management is more inclined towards some kind of an arrangement with ONGC. In either case, do you think shareholders have an opportunity to make money?
Oh, the stock run-up has been huge again, Pradeep. And with this development, either or, I think the shareholders who probably own GAIL should continue holding GAIL. Again, I think the core dynamics are working in its favor. If you look at the expectations of increased gas production from ONGC from the C2, C3 fields, will substantially add both in terms of the transmission as well as the gas trading revenues. What you're also looking at is in terms of the downstream or the petrochemical product business as well. You're looking at realizations probably remaining far more stable. And at the same time, you're probably looking at output getting increased, specifically with full utilization of the Tata plant. Again, in terms of transmission numbers, even if you assume 110, 115 MMSCMD in terms of volumes, my own sense is that the kind of numbers that can actually come through, along with expectations of the revision in tariffs, the tariff revisions that can take place, I think that can significantly add to the sensitivity in terms of earnings that GAIL can report. So yes, I think if investors are holding on to the stock, irrespective of the development, I think they should probably hold on to a stock like GAIL.
Okay. The other big names, this last week, Mayuresh, and people kind of ignore or let go of a stock after their initial 2 or 3 days of a news flow is out, are the HDFC twins. Now, from a retail investor's perspective, strictly, I'm asking you, there is this fundraising which is large in nature, which makes the price to book multiples attractive post the fundraise, and therefore if it has to revert to mean, then there's that natural upside that comes in 3-4 months. Have you been able to figure out what's the quantum of upside that could come into either HDFC or HDFC Bank, and therefore are these good stocks to buy from a tactical perspective?
So Neeraj, again, I think these stocks have never disappointed long-term investors.
Sure.
And the value probably still remains from the perspective that they will keep on expanding their balance sheet size. So largely, I think, as you rightly pointed out, I think the capital raising exercise probably a step in the right direction. What it probably does is gives ammunition to probably expand balance sheet even more aggressively for the bank. And again, even for the parent HDFC, again, if you look at the core business dynamics, even though the GNPs have jumped up a tad bit, they've been able to maintain the spread. So I think all the quartile definitions that we put in for a stock in terms of financial performance, the loan growth, where you're talking about asset quality, impeccable management pedigree, you're probably having the right ingredients in place. And even though valuations might look a little bit on the higher side in comparison to the others, I think the kind of numbers that they can still churn out over the next 3 years, 5 years can still be better or at par with industry, considering the balance sheet size that they're sitting on. So yes, I think the case remains very, very optimistic for both these stocks. A clear disclaimer, we hold these stocks in our funds.
Okay, so bullish bet on HDFC and HDFC Bank. Jai Thakkar, Assistant Vice President for Equity Research at Anand, Rathi, is joining us, and also Rahul Randeria, Technical Analyst at IFCI Financials, is in the studio. Jai, this morning, Mr. Nifty is trading weak, down by around 30 points at this point of time. Will you initiate a short trade in either futures or options?
Hi, good morning, Pradeep. Well, I would not initiate a short, Pradeep, at these levels, because I think that's the, we can, what one can notice is that on the upside, definitely 10,500, 550 has been, acting as a very crucial resistance, despite Nifty, in fact, making an attempt to move above those levels in the last trading session, but it didn't quite succeeded in closing substantially on the upside about 10,500. I would say still on the lower side 10,400 is acting as a very crucial support. So for this series we have been suggesting that the range is going to be 10,550 to 10,400 on the lower side, and once this series is over, I think eventually this will take off on the upside till 10,400 levels are not broken. So our view is more of range bound till this range is not broken. And I think in this range bound trading session, I think I would not initiate a short. In fact, I would say that one can continuously focus on the stock specific move, wherein there is much more advantage and good risk reward compared to the index. And as far as the index strategy is concerned, Pradeep, I would say that whenever it dips at around 10,450, 400, 440, in fact, I would say that's again a buying opportunity, because that's safe compared to the writing calls or shorting at these levels, because it's just 10,500, 550 options on the higher side, whereas on the lower side we have been continuously seeing good amount of put writing happening at each strikes. So I am slightly on the positive side. I would say buy on index on dips, and stock specifically, I think wherever there is a good breakout, there is a good move, despite index heading lower or trading in negative zone or sideways, one can continue the buying activity out there in stocks.
Rahul, what about you? Good morning. And what is it that you would be recommending on the indices today?
Yeah, good morning all of you. If you look at the last 4 days of the Nifty, it has been moving in a band of just 75 points, and it is on a verge of a breakout. Maybe today's initial cool off should be used as a buying opportunity, because if there was weakness, market should have corrected, but that has not happened. And today currently is an expiry week and we have 3 days, so definitely the movement would be sideways to up. So at current levels one can buy Nifty with a stop loss below 10,382, and short term positional target would be 10,575 and 10,600. So definitely any dip should be used as a buying opportunity.
Okay, Rahul, what are your stock specific trades that you'll recommend?
Yeah, I have a buy call in TCS, where stock has given a very strong weekly closing, supported with strong volumes. The momentum could inch higher from the current levels in the coming days. Definitely for positional traders, one can buy TCS at current market price, which is 26.46, and on corrections to maybe 26.30. Short-term positional target would be 27.40 with a stop loss of 26.10. My second buy call is in Siemens. The stock has given a downward falling wedge breakout a couple of days back, and stock is slowly and gradually picking up momentum in the deep oversold territory. Definitely we could see a decent upside from current levels. Traders can buy at current levels, which is 12.30, and on intraday corrections to maybe 1215. Upside positional target 1300, and one should place a stop loss below 1197.
So TCS and Siemens, these are two recommendations coming from Rahul Randeria. Jay, what are your calls?
Well, Pradeep, I have 4 buy recommendations. The first buy recommendation is on Tata Chemicals. Now, this stock has been consolidating well in a triangular pattern, and I'm expecting this pattern to provide a breakout on the upside, as the indicators have reversed quite well from the zero reference line from the oversold territory on the hourly charts, and I would say on the weekly and the monthly chart, this stock is trading well in the positive bias. So I think the target on the upside comes to around 780. One can buy this with a stop loss of 719.50. The second buy recommendation is on CESC. Now, I have been recommending this since a couple of trading sessions, and it has finally provided a breakout on the upside from that range. And now I think it has just retested the range or retested the breakout level, and it's likely to head higher again from these levels. The target on the upside comes to 1111.50 with a stop loss of 1032. One can buy this as well. The third buy recommendation is on CAPF. Now, this stock on the hourly charts, the previous move was an impulse. So if I just take the equality on the upside of that previous move, the target comes to 727.50. So one can buy this with a stop loss of 689.50. And final buy recommendation is on Rathi Sugars. Now, when I look at the monthly and the quarterly charts, Pradeep, that this stock has now just come back to its lower end of the range, and I think there's a very high probability that this stock has now bottomed out, I would say, for the medium term. Because this seems to be the last wave of this consolidation on the lower side. That's a wave E of the triangular pattern. I think since it has reversed from those levels again, it has respected the support on the lower side. The probability from here on of this stock inching towards the higher end of the range at least is quite high. However, for the short term, one can buy this for a target of 61 with a stop loss of 54.95. But I would say that this stock is a buy for a medium term as well. I would like to add one more stock, just it reminded me of Alembic Limited, which has clearly broken out from a consolidation, long consolidation with an increase in volumes. I think Alembic is less likely to now go below or fall below 50 levels. On the upside, for the medium term traders, I'm saying it can zoom towards the levels of 70, which is its previous, I would say, life high.
So Jay is extremely bullish. I'm sure he has more buy calls to give out, but we'll probably discuss those stocks later in the day. For now, let's move on to our colleague Jayesh Khilnani, who is joining us with insight on Bloomberg Terminal, Bloomberg Edge, our regular feature, where today Bharat Financial is the stock, I believe, Jayesh, you are focusing on.
That's right, Pradeep. I'm focusing on Bharat Financial. That is because a very interesting chart pattern has been formed on Bharat Financial, which is called as the bearish engulfing. And also mind you that the stock has closed below the 1,000 rupee mark for the first time in last 7-8 days. Now let's have a look at how the bearish engulfing actually works. So it is to be formed at the top of a particular trend, and you have to watch out for two consecutive candles. So the bullish candle has to be followed by a bearish candle. So green and red are the two candles that we are looking out for, wherein the second candle should engulf the first candle's entire body, which means that the red candle should be bigger than the green candle that we have on the screen. And longer the body of the red candle, the better, or the likelihood of going down increases. Now going to the chart of Bharat Financial, you can see that this is the last 6 month chart of Bharat Financial, where you can see that the last two candles, that is now this red candle, you can see that this has completely engulfed the green one, which has brought us to an evidence that there is a bearish engulfing form. Now 2 days prior to this also, what is interesting, you can see that this big red candle, this is also a bearish engulfing. So two consecutive bearish engulfing coming in for Bharat Financial.
Okay, that's interesting. And Jayesh, how well has this indicator worked for this particular trade on Bharat Financial?
So Neeraj, couldn't believe what I saw on the screen. If you had followed all the bearish engulfings for given by the terminal, the net result would be in excess of 90%.
Wow, sell hit rate of 94% over the last 12 months. A bearish engulfing pattern on Bharat Financial. Jayesh, many thanks for getting us that note. Rahul, I'm tempted to ask this to you. I don't know if you've looked at Bharat Financial recently, but the Bloomberg terminal seems to indicate that there is a high probability that the stock may correct. How much we don't know, but may correct, and therefore it might be a bear trade. You don't have to agree necessarily. What do your charts say?
Yeah, stock has been moving in a band of say 1024 on the upside, and on the downside it has been going towards the level of 970. So definitely currently it is on the midway of that particular band. So maybe stock can slide little bit lower from the current levels, but to be very frank, I'm not seeing major downside. Definitely the momentum is weak, but it could go towards the level of 975 because there has been a crucial cluster of support, and we have to watch out for those particular areas. If it closes below that, then only we could see a further sell-off. But definitely at current levels, we could see a 975 coming in the coming days.
Mayuresh, any thoughts here? IndusInd Bank, Bharat Financial combo?
No, so both the stocks, Neeraj, probably have moved up in higher orbits, and largely again, the performance for IndusInd Bank in particular has been exemplary. So I think the kind of loan growth, the asset quality reporting should probably remain very, very good. For Bharat Financial, again, I think all the right ingredients have played out. The asset quality probably has stabilized. If you're looking at their securitization part of their portfolio, they are doing that probably successfully in tranches, and again very, very successful in probably maintaining their spreads. But even if I look at valuations, I think valuations probably on the higher side. So what I probably like is something like an Equities or even an Ujjivan at this point of time. Though I think there is still some amount of stickiness in terms of branch expansion, and the OPEX probably still eating into their balance sheets. If you look at the numbers in terms of both disbursements and the kind of advances that they've been making, specifically after demonetization and implementation of GST, the normalization effect should start taking place on their balance sheet over the next 2 to 3 quarters, and that should significantly aid their earnings. Valuations again looking very, very attractive. So as a basket, probably outside space similar to what Bharat Financial does, a basket of Ujjivan and Equities is something that I prefer.
Do you like stocks like United Breweries after Maharashtra government has agreed for a hike in beer prices?
So again, I think you're probably looking at a lot of factors moving for these liquor companies. What you probably learned in terms of input costs actually going up, the kind of ambiguity that one had over the GST implementation and what kind of impact that will have. And again, I think the capping and what probably happens with liquor prices, specifically in Maharashtra. I think the kind of run-up that we've probably seen in the stock and the valuations thereof probably looking a little bit fair at this point of time. So I think there might be a potential upside for these stocks, but the risk reward probably not in favor of liquor stocks, at least at this point of time.
Interesting. I quite like that thought on Equities and Ujjivan as well. If you quite look at the valuations, they look very, very interesting. Do watch out for some of those. Mayuresh, what's your favorite road construction company? A lot of them are getting orders. Order books have swollen compared to the annual estimated sales as well. What's your favorite here?
So I think we discussed a couple of them, Sadbhav and KNR Constructions. Largely, again, the managements of both these companies looking very, very focused in terms of execution. Secondly, in terms of debt reduction, specifically for Sadbhav, that should start coming through. And third, again, I think in terms of the ordering that can actually come through on HAM, that is probably far more lucrative both for road contractors as well as the EPC guys. So both these companies can probably do well. An outside bet, if you can throw it in the hat, is something like Dilip Buildcon. The stock has moved up significantly, but still a short-term move cannot be ruled out. I think the management is very, very confident in Neeraj at this point of time of achieving revenues of around 7,000 odd crores. Very strong EBITDA margin performance expected. And they've actually tied up with the Chatapal group. So I think they're expecting a huge amount of inflow to probably come through. 550 odd crores probably by the end of this fiscal. Around 1,600 crores is what the term sheet signing is, which means debt reduction happening on their balance sheet. And if they're able to execute well, as the management probably envisages, they're probably looking at cash flows and IRRs that can probably take care of the rest of the debt and probably prop up return ratios. So an outside bet can also be Dilip Buildcon.
Well, we have just 3 minutes to go before pre-open. Rahul, quickly, if you look at BHEL and L&T, both the companies have received big orders. Do you see a significant upside? Any targets?
Yeah, if you look at BHEL has been consolidating a triangle formation. The stock is in an verge of a breakout. Yes, Friday it took an attempt, but again it lost the ground and ended just marginally positive. But looking at the setup, I feel that short to medium term the stock has potential to test the levels of 99 rupees from the current levels, and short term traders can buy at current levels with the stop loss below 89 for a target of 99. L&T has been very strong in the last couple of days. It has seen a 90-degree move. Definitely the yearly chart is also very strong, and stock is going into unchartable territory if it breaks its all-time high of, if it sustains above its lifetime high of 1275. So definitely the momentum is strong, but one has to wait for some cool off. Maybe the ideal level to enter would be around 1250. One should place a stop loss below 1225, and short to medium term we could see stock testing the levels of 1330 or 1340 into next maybe 1 or 2 months.
A stock that could be active today could be NHPC. Jay, not normally spoken about, but could react a bit today. What do the charts suggest, NHPC?
Well, I would say that, as you rightly said, that no, we don't see much of move coming in this stock, but whatever recent move has shown that, there has been a good build-up in this stock, and it has been forming good high tops and high bottom. And in fact, as far as that, I checked the data as well, this stock is again likely to, surpass its previous swing highs of around 31 on the upside. I think, yes, one can buy this targeting around 35.5 going forward, as the probability of a new high again in this stock is quite high. It seems to have completed clearly its correction, and on the lower side I would say now the stock has a good support at around the levels of 28. So I think it's a buy for a target of 35.5.
Okay. Keep in mind, Motilal Oswal has come out with a buy note. Their target is about 37 rupees, which is an upside of about 23% from the current market price, and we might see NHPC react a bit in the session today. Lots of PSUs to watch out for today. NBCC is the other one. then the oil marketing companies and GAIL are the other ones. So lots to watch out for. The markets are likely to start off on a flattish note. Don't get perturbed with this SGX tick. The markets could well end very, very differently towards the close of the trading day today. Promises to be a low volume day, at least for the Asian markets, if not India. First rates in the pre-open, well, not suggesting any weakness. These might change though. We might have an odd stock flaring up, and which is by these rates. So let's wait and watch for these to settle down. I want to see what ONGC is up to, what GAIL is up to. ONGC a big mover in Friday's trade. Let's see if there is the momentum continuation. Again, these might change, but start in the green. GAIL is the interesting one. And then I want to see if NBCC is reacting meaningfully to this news flow. 1.5%, not too much. Okay, let's wait and watch. The company is not being accused of graft, the chairman is, but it remains an overhang, as Mayuresh rightly said. Let's wait and watch though if there's some reaction there off on NBCC. Watch out for NHPC as well. That big call from Motilal Oswal, about a couple of percentage points higher. Last but not the least, United Breweries could be an interesting one in the session today. Let's wait and watch if that reacts, because I mean, it's a small contribution to the top line, I believe, the hike in MRP in the state of Maharashtra, but could be beneficial for United Breweries.
Pidilite is up 5.5–6%. Interestingly, not much volume though, around 2,000 shares traded so far. Arcom has gained 3.5% in early trade. BHEL, as we discussed, the order flow has benefited the company, up 2.5%. Tata Power, Adani Power, so these are some more stocks from power sector doing well. On the other side, you have Hexaware down 3.5%. Will that really be the case? We'll have to wait and watch. You have SRF correcting a bit, Natco Pharma 1.5%, so not much, but some drop here as well. If you look at some more stocks, 5 Paisa is stuck at 5% upper circuit. That has been the case for a while now. If you look at some more stocks, Welspun Corporation is up around 6.5%. That is on the back of the order flow. Some more stocks to track would be maybe Chamanlal Sethia. That also continues to look strong. So these are some of the stocks doing well in early morning trade.
Well, okay, let's go across to Nikki Mirchandani, who's standing by with the big brokerage calls of the morning. Good morning, Nikki.
Hi, so the first one that we're picking up is Credit Suisse on Tata Steel, where it has maintained an outperform rating, suggesting an upside of nearly 16% for the on the upside for this counter. It has assessed the impact of the right issue of around 128 billion, along with your capacity expansion plans, which is a 5 million ton Kalina Nagar plant, where the cost of around the company is expected to spend around 235 billion of capex over the next 4 years. The right issue is, however, expected to keep the ratios comfortable. The leverage ratio is comfortable for organic expansion, and it also says that capex will lead to higher debt, no EBITDA situation for quite some time, and will make the stock look attractive. But then the project VV is expected to be high as compared to that of your capex, and the outlook doesn't stain, and the brokerage remains constructive. The second one is an interesting one. That's the Motilal Oswal on NHPC, where it has initiated a report with a buy rating and a target price which suggests a potential upside of nearly 23%. Valuations are attractive at this point of time at 1 times its book value. Regulated equity is expected to increase. Under recoveries are expected to decline. We are expecting we have more room for even higher payouts and buybacks. Earnings seem to be an inflection point at this company after 5 years of stagnation. The third one that we're picking up is Nomura and on HDFC. It's an upgrade coming in for the counter to buy from neutral, and a target price of upside potential of nearly 18%. Risk reward seems to be well placed right now according to the brokerage. Core mortgage business, which was subdued, is expected to be remain robust, and the subsidiaries, which contribute more than 50%, are best in class. And so more investment going in further into these subsidiaries is definitely a value accretive for the shareholders.
Thanks, Nikki, for all these details. So these are some of the large cap stocks in focus today, and NHPC would be a mid cap that we already talked about. But Tata Steel, Credit Suisse is bullish on this, Rahul. If you look at the early morning indications from the Chinese commodity market, they're not that strong. What will you really do with Tata Steel, Vedanta, Hindalco this morning?
Particularly if we talk about Tata Steel, in last 6 weeks the stock has been moving a band. There are a couple of candles where one is bearish, one is high wave candle, one is doji, and last week was a bullish candle. So definitely the stock is poised for an upside congestion breakout. Definitely, but for that stock needs to break the congestion range of 718. If it breaks and trades above those level, one should initiate long for the target of 750, and one should place a stop loss below 700. If you talk about Hindalco, stock has rallied significantly in the last couple of days. So on the lower degree chart, the stock is entering into the supply zone. So definitely we could see some sort of profit booking. So among these, I would just look out for Tata Steel and recommend any traders, those who have bought at lower levels in Hindalco, can try to book profits in the range of maybe 270 to 275.
By the way, must mark Welspun Corp. It's got that large order, and that stock is up about 10.5. DB Realty continues to rise and shine, up about 9% in trade today as well. But the pocket that has done really well is IT, large cap IT, and from the looks of it, TCS will start off on a good note in today's session as well. Bring up TCS for you, about 1.5% higher. Likely, still the pre-open rates have not settled in, but this follows what is a pretty good week for TCS and large cap IT, and this may continue to rise in today's session as well. Let's wait and watch what happens to TCS today. Mayuresh, a quick thought really on TCS?
No, so strong order book again, Neeraj. The execution patterns have been extremely encouraging for the company. The digital investments are probably paying off in terms of their core contribution to top line. And though I think the management probably looking at a weak second half as the entire IT sector compared to the first, I think the overall prospects probably look far better for TCS. So yes, I think the whole recommendation continues for TCS. Our top pick probably within IT in the top tier name still remains HCL Tech.
Okay, stay on, gentlemen. So much more to talk about. It's the last week of 2017, and we at Bloomberg Quinn look at the stocks that have clocked stellar returns this year on our special series, Multi-Baggers of 2017. Today we feature Venky's India. All of you have heard about this. Yatin Mora is standing by with what this company is all about and what's been working in its favor. Yatin.
Thanks for that, Neeraj. And you know, as the wall graphic suggesting, 7 times up in this calendar year. So 2017 Venky is 7 times up. Now if you look at what's really working, if you look at the return ratios for Venky's, the return on equity, look at this 26.3%, and return on capital, which is return on capital employed, ROCE, it is almost 16.2%. Price to book, of course, it will be slightly expensive given the fact that it's a run up 7 times. So the price to book on FY19 basis is close to 4.8 times, and FY19 price to earnings is probably cheapest in the FMCG basket and the kind of sector that Venky's is currently operating, almost 22 times. Now, that was the valuation screenshot. But if you look at the debt also, which has come down significantly, so from a peak of probably 715 crores, the company has managed to repay most of its debt, which is now currently at a 5-year low of 290 crores. So, apart from the kind of cash that they've generated and the kind of money that they've spent on capital expenditure, they have been successfully been able to reduce the leverage on the balance sheet. Of course, if you look at the revenue pie chart, really, poultry and poultry products really contribute to bulk of their revenue composition, which is almost 47%. And the animal healthcare segment as well as the oilseed segment forms a majority part. So, don't look at it from only a poultry company, but also animal healthcare as well as oilseed segment is something that is keeping the stock uptick in terms of the revenue growth. Of course, animal health is something wherein they enjoy 20% EBITDA margin, and probably poultry is something in which they get a lot of their bulk turnover, wherein the margin is close to 11% on the institutional side. Now look at the valuation snapshot really and how really the growth has happened for the company. So far in the first half, the company has already clocked in revenues of 1,251 crores, very close to what they have done in FY17. But look at the profitability. Whatever profits that they earned in FY17, they have already done it in first half of this financial year. So the kind of profitability which has seen improvement is something which is the reason for the stock to give such a steep uptick. Of course, the margin is also expanded by 200 basis points, and also the key return ratios improved significantly for the first half of FY18. Of course, egg prices, and that is something we need to watch out for, have significantly moved up. And from Jan, it was close to 338, and look at the kind of gradual uptick that we have seen. Of course, it cooled off from the peak, and also there is seasonality. But even if you look at it from a year-on-year basis, probably egg prices have moved significantly in the favor of the company. Of course, what's working in favor of the company? Sharp rise in poultry prices, better realizations, and that was the reason I was pointing out how margins really improved for the company by 200 basis points. Demand supply moving. Of course, cow slaughter or beef ban is something which is also playing favor, because of which chicken demand is moved up. Higher utilization, capacity expansion, lack of cold storage, and decline in raw material prices is something again that everybody is putting on their radar. And finally, the key risks, probably event like bird flu and decline in the commodity prices, which is basically chicken and egg. If those prices move down, probably there could be some margin pressure. But the kind of move that we have seen for the company, the kind of move that we have seen for the end product, probably indicates that from here on also there could be a sustainability as far as Venky's profitability is concerned. 7 times is what the company delivered returns for the calendar year 2017.
What a dream run. And Yatin, I think you would like to make a disclosure also that you have never tasted neither chicken nor egg in your life.
But that hasn't.
That would be typically for most of the people from my community.
Same for us.
Same for us as well. Yeah, indeed. Well, thanks a lot for that, Yatin. That's an interesting analysis on Venky's India as well. I'll ask this to Mayuresh too. Rahul Arora, CEO of Institutional Equities, and Nirmal also joins in. But just before I take in my questions to all of them, it's that time of the show when we have to tell our viewers all that they need to know to stay ahead in trade. At a minute's away from market open, let's tell you all the key stocks to focus on. IOC and BPCL keen to acquire government stake in GAIL. That should keep GAIL excited. Watch out for this stock.
Larsen & Toubro backs Delhi Expo Centre Phase 1 contract for 2,790 crore rupees.
And continuing with order wins, BHEL wins a 672 crore rupees order from Indian Railways.
SEBI revokes shell company status on Prakash Industries. Good news for the company.
Welspun Corp receives an order for a supply of 1.24 lakh MT pipes.
Well, government extends anti-dumping duty on phthalic anhydride. Move will benefit companies like Tirumalai and also IG Petrochemicals.
Okay, so those are a clutch of names to watch out for in today's session. But as I said, Rahul Arora joins in. Our experts are also with us. But Rahul, just a quick initial thought from you. Expect this week to be lackluster?
It should be, Neeraj. I think almost about half of our clients are on leave on the institutional side. So I don't think too much major is expected in terms of news flow. I think it should be a fairly quiet week in terms of flows as well, and for the headline market as a whole as well.
Now, traders normally believe that the quarter end is a good time to trade in mid-cap stocks, especially those which are institutional favorites. And mid-cap index is already at a high. What's your call there?
Well, honestly, I think a lot of the portfolio adjustments that needed to take place have probably taken place over the last week, 10 days. I think we've observed a fair amount of churn at our desk as well. So I don't think there'll be too much by way of activity in terms of churn right now. I think a lot of it may probably come into the fourth quarter, especially on the domestic institutional investor insurance side, because it's a very strong quarter in terms of insurance flows for that part of the market. But I think it's been such a dream run for mid caps this year that you've got to be very selective when you're entering as you look at 2018, because valuations are quite absurd in various pockets of the market.
Mayuresh, just a quick thought from you on this particular stock, Welspun Corp. If you track it, it's got that order win, as a result of which it's starting off 10%. Best performing stock. A quick thought here.
No, so again, I think it will reflect in terms of the stock price, but largely again, I think how they're able to execute is also going to be extremely critical. And incrementally, if they're able to execute well, I think the numbers will show up. My own expectation is that a lot of orders will probably flow through on the infrastructure side. So I think pipes, ancillary pipes, pipes related activities is going to benefit significantly, but execution is going to hold key. So yes, I think if they're able to do well, I think the numbers will do the talking for Welspun Corp.
Okay, stay on, gentlemen. A minute left for the market to start. Let's just get in the quick trading thoughts from our experts. Rahul, Randeria, to you first. Your top trading call for the day.
I would be going long in Bajaj Auto, where on the Friday we have seen a strong candle formation, and the weekly formation was also strong. So definitely from current levels we could see maybe 2-3% upside. So traders can buy at current levels with a stop loss of 32.56 on the downside, and on the upside positionally the stock can test the levels of 34.50.
Okay, Thakkar, 10 seconds. Your top call for the day today.
CAC for a target of 1111 with a stop loss of 989.50.
Okay, Rahul Randeria as well as Thakkar. Gentlemen, thank you so much for joining me today and giving us your thoughts and your perspectives. Those are the top calls from our technical experts. We'll quiz our fundamental experts on a bunch of other issues as well, but this is what the market is looking like this Tuesday morning, start of the week. It's a start in the green, which is not bad. The Nifty Bank is flat, but it's a flat trade, you would have to say. 17 odd points for the Nifty, about 62 odd points for the Sensex. No surprise there. It is starting off on a flat note. I don't think the broader market will also be materially different. Maybe some upsides compared to the large caps, but yeah, the small cap index up about 0.4%. The mid cap index lying absolutely dormant. No surprise, as I said. Let's get the heat map and show you what the markets are doing on open. And even Stevens, no big losers, no big gainers. Gale, as I said, is excited, so about 1.5% higher. IT is showing contrasting trends. TGS is up 1%, Infosys is down about 1%. But aside of that, no big moves. We have Gale and we have ONGC amongst the winners, and these were the stocks that are doing well on Friday's session as well. Remember, ONGC was the top gainer on the Nifty in Friday's trade, and that is starting off well. What about some specific stocks and news? Let's bring up 3 or 4 names that I thought we should highlight at the start of the trading day today. Firstly, by the way, this corruption case graphic is not against the company. It's against the CMD of NBCC. So this might be conveying the incorrect message, but NBCC is a stock in focus, down 2.5%. Let's move on very quickly to some of the other names. Beer prices have been hiked in the state of Maharashtra, and United Breweries not reacting too much, marginally higher in the session today. What else? Some other names should come up on your screen. NHPC, the Motilal Oswal target is of 37. The stock is starting off about 2.5% higher, good going there. And then a few pockets which did well in Friday's trade. So RT Industries and Navin Fluorine, the specialty chemical companies, both of them went up. RT Industries had news to itself, but that's done well. And are they seeing some gravity? Yes, they are. Both Adani Transmission and Reliance Infra, after 2 strong days, are just seeing a bit of a quiet day in the session at the start. Pradeep, what are you spotting?
So Kirloskar Oil is doing well because of the news flow, but you also have Kirloskar Brother moving up around 5% or so. We have seen SR Shipping higher by around 10% today. Interestingly, Welspun Corp is up on the news flow once again. Shriram EPC is up 6.5-7%. 63 Moons has gained around 6%. GVK Power has gained around 4.5-5% on the news that one of its subsidiaries has won the bid for coal. RCom has gained 4.5%. Jaisawal Nico would be another stock which is moving up. Mukund has done well. So these are some of the small cap names really on the positive side. More gainers than losers, but you have Renaissance Jewelry down by around 4.5% in today's trade. Religare Enterprises, after moving up for several sessions, is correcting today. Some of the media names like TV Today under pressure after stellar move last week. You also have Thangamayil Jewelry. So gems and jewelry is one segment which is not doing well today so far, we can say.
Okay. Mayuresh, my final question to you really. Upstream or oil and gas, GAIL, ONGC, all starting off well. What would you be doing with any of these names?
So I think quickly disseminate what my thoughts are. On the upstream side, it's again a variable of how crude moves and how the rupee moves against the dollar. And if one really assumes that crude might get capped around 67, 68, I think incrementally, I think earnings will improve for ONGC in terms of reported numbers. For even 17, they reported crude between 53 and 55 odd dollars. So incrementally, the earnings estimates does go up. But these two variables remain key. For downstream companies, obviously, if crude prices keep on moving up, I think it's detrimental to earnings. But if one again assumes that this cap probably holds on, the sensitivity to earnings probably improve. The marketing margins have come down, but there is scope for those probably to again start moving up, and that improves the earnings estimates. Within this pack, I think IOC still stands out because I think the varied business interest that it has got, both in terms of the pipeline business, the petchem business, the transmission business, should hold up its earnings. Within the midstream, as I said, I think GAIL remains my favorite, both in terms of expectations of increasing output coming in from ONGC, the petchem side of the business with increased volumes probably holding on to their earnings profile. And again, the transmission volumes basically holding on, which means that the gas trading business also should have stable EBITs. So I think GAIL, IOC probably remain my top bets within this entire oil and gas theme. Outside the PSV space, obviously Reliance is something that I own, I like, and probably the earnings will do the talking for Reliance over the next few quarters.
Thanks a lot for that, Mayuresh. Good having you as always. Okay, we'll continue our discussion with Rahul now. Rahul, IT, ever since this whole bit about Accenture's earnings came about, gave a bit of a fillip to large cap IT, at least the last 3 or 4 sessions. But mid cap IT has just been another kettle of fish. Everything from a Sonata to a Nucleus to Larsen & Toubro Infotech, almost everything is done well. What's the house call now? Because I knew you guys were at the right time skeptical on IT. Is that call changing for mid cap IT? Has it already changed, or is it too expensive now to try and dabble into mid cap IT?
Well, Neeraj, it's an interesting question because, when people look at IT companies today, they're looking at them from a cash preservation standpoint and from a valuation safety standpoint. Cash preservation because these companies are probably going to be doing buybacks. A lot of them have announced it. But I think, Neeraj, as you rightly pointed out, in April 2015, we had a sell on the sector, which was reinforced again at the start of 2016 and 2017. Coincidentally, since you asked the question, we have put the entire IT sector under review as of this morning. Reason for that is we actually want to give it a fresh look. But that doesn't take away from our standpoint that we do not expect the frontline IT companies to grow more than mid-single digits. So my head of research, Girish Pai's call is that at best, the frontline IT companies will probably be able to grow at 5 to 7%. For that, I don't think you should be paying more than 15 to 17 times, which is something like a TCS is still going at 18 times. Also, Neeraj, you have to keep in mind that the rupee has appreciated. A lot of the wage hikes for senior level employees have not taken place. They've only given them to mid and junior level management, and especially the on-site salaries are going up quite substantially. So in that backdrop, even margins will be under pressure. And if you just go back 5-6 years and you see the ROICs of these companies, which used to be north of 60-70%, they've all come down to 30% or even lower. So in this environment where you're probably getting growth in a lot of other sectors in double digits, in some cases even high double digits, I'd be more comfortable paying a higher valuation there as opposed to a sector where I still see only mid-single digit growth and margin pressure, which could lead to pressure on profitability and deteriorating return ratios. So I still don't think IT becomes a buy for us right now. That being said, like I said, because the underperformance has been so stark over the last 2.5 years, we're ready to give it a fresh look. But I don't see us upgrading the sector to a buy at all from here. It will at best, because of the capital preservation standpoint, move into a slightly less negative or accumulate territory. But I wouldn't advise investors to come in and buy this sector even at this point in time.
So it looks more like a tactical call, Rahul. Do you expect money managers to maybe book profit in some of the better performing sectors where numbers have been good and therefore prices have gone up significantly, maybe auto or even financials? So you expect some money to flow out and get into a defensive sector like IT?
Not really, Pradeep, to be very honest, because you see, after the last round of changes that took place in the Sensex, the banking sector is now, accounting for almost 40% of the index. So if a fund manager has to take a call on the market, he cannot take it X banks anymore. It's too large a part of the market. And the point here being that our economists put out a note last week where credit growth, even non-agriculture, is actually picking up in the system. It's moving to high single digits. In some months, it is even moving into double digits. Now, the point here being that at a time like this, when you've seen the worst of the credit cycle and the banks have held out, The other aspect is the liquidity that the domestic mutual funds and insurance companies are getting. I mean, if you just take a look at the last 2 months, you've had funds like HDFC Mutual Fund, Axis Mutual Fund, Reliance Mutual Fund, ICICI Prudential. They've all raised NFOs, and a lot of that incremental flows is going to go into banks because there is no other way to play it at 40% of the index. So I don't think a lot of these people will move out of banks into IT. That's the first part. To your second part, where there has been a very sharp run up, say for example you mentioned autos, Maruti. If you remember, when the Maruti strike took place a few years back, the stock was available at 950. Today it's at 9,500. So it's been about a 10 bagger, and yet Maruti is not available to you north of 25 times, when a lot of other companies in the mid-cap sector with similar kind of growth rates are going at 35-40 times. So I'm not too sure if fund managers are going to be tempted just because there is a run-up in stock price, because there is still earnings growth potential in some of these sectors like auto, consumer discretionary, consumer staples as well. So at a time when you're seeing earnings growth, I understand valuations may be a little more expensive than IT. I think IT has a structural problem on hand. And I think when you have a structural issue on hand, I don't see fund managers taking a short-term tactical call, especially when the rupee is going against IT. Sometimes you observe a trading call when the rupee is depreciating and some amount of allocation is made, but this time even that is sort of moving against IT for the moment. So I don't see too much of a fund allocation moving out of autos and banks into IT at this point.
By the way, we'll have a fairly decent conversation about IT with CP Gurnani of Tech Mahindra in just moments from now. But Rahul, since I heard you mention that there's no point in looking at IT because there are enough and more spaces available wherein growth could happen in double digits, in certain cases higher double digits. My question to you is, what are those pockets, and are there investment opportunities not just for 2018 but from a 3-year or a 4-year perspective where earnings growth could stay high for the next 3 or 4 years?
Neeraj, I think there is still plenty of opportunity available across sectors, to be very honest with you. So I remember when we had done the Diwali show, I had mentioned that, a very key, strong indicator that I look at when I look at the market is the 10-year bond yield. Now the 10-year bond yield, if you inverse that, it gives you an indicative 1-year forward PE. The way the bond yield has moved up, it's indicating that the market PE should be around 13.5 or thereabouts, but it's actually, if you look at the Bloomberg consensus estimates on FY19, the market is trading closer to 18-19 times. Now, what is taking this PE ratio to 18-19 times? And I think a large part of it has to do with autos. So I would still be a buyer in stocks like iShares, where I still think that, FY18 would probably end with a 25% plus top line and bottom line growth. I think FY19 will be another year where you'll probably get 20% top and bottom line growth. We're fairly positive on names like VST Tillers and Tractors and Balkrishna Industries. Again, very solid sort of structural names. You'll get a lot of these names in the consumer side. So I think names like Whirlpool. So if you look at our estimates on Whirlpool, it's probably going at 32-33 times FY19 earnings. But again, 25% kind of growth that we're seeing over there. Pharma, large cap pharma, where the last 2 years have been a virtual washout. I think that could be a huge surprise. Names like Dr. Reddy's, Cipla, even in the mid-cap space, names like Dishman Pharma, Jubilant Life Sciences, where the earnings growth could be disproportionate, where you could actually have EPS growing at anywhere between 70 to 100% year on year for the next 2 years because of the depressed base. And most of these companies are coming to you south of 15 times price to earnings multiple. So that's another very interesting pocket of the market. And selectively cement also, Neeraj, because there's so much focus on affordable housing that if you actually pick and back the right horses, names like Dalmia Cement or JK Cement, I think there could be tremendous amount of value even there. I mean, the list would go on. I think there are 2 or 3 or 4 names practically in every sector which you could pick up. I mean, I've been a huge bull on Hindustan Unilever for a while. We're expecting margin expansion of almost 500 basis points between FY17 actual and FY20 reported, which will be an 18-20% kind of earnings growth, which IT will not give you. So I think if you look carefully within sectors that have done well as well, I think you will find value and growth coming out. Lever is an exception. I don't think it's coming at a cheap price to earnings multiple, but you're still going to get growth. But I think if your viewers look carefully within these sectors, there is enough and more opportunities available across the board.
Okay, Rahul, thanks a lot for joining us this morning. So a contra call in large cap pharma and also select mid cap names. That's one interesting call coming in from Rahul. But ADAG Pack is doing well this morning. In fact, RCOM is up 5.5%. But look at Reliance Capital, Neeraj, over the last few minutes. There's a sudden jump in volume. Looks like there might have been some deals here, and we'll try and update on that. But stock is up 2.5%. In fact, entire ADAG Pack is finding support at lower levels.
Well, quite interesting, really. So what's happening in ADAG? And topical at that point of time to get in Sunil Singhania of Reliance Capital, who's optimistic on the earnings revival going into the next year, however, believes that one should not expect returns as stellar as the ones received this year. Here are a slice of that small conversation that he had on our special series. Thank God it's Friday.
We are quite optimistic. Frankly, we have been optimistic right from 16, but we have gone wrong.
Right.
I think we are reaching a situation where things are now falling in place. So 2016 end to 2017 end, we had a lot of headwinds.
Right.
Headwinds were from obviously appreciating rupee. We had demon. We had GST.
Right.
I think all those are becoming tailwinds now. So we have a stable rupee. We have the effects of demon almost gone.
Right.
We have companies and sectors coming out of GST. And if other countries in the world who have implemented GST are a reflection, then maybe it will become a tailwind rather than a headwind. We also have the support of commodities generally doing well. So, commodity stocks should report some decent earnings. Corporate banks, which were providing a lot and therefore subduing the earnings overall, should not be doing that going forward, and there can be surprises as far as earnings are concerned.
Right.
And I think even from an export front, exports suffered in 2017 for India. We are seeing a revival, and there's also a push from the government to encourage exports. So maybe some of the export sectors might, contribute towards rising earnings.
Right.
So our base case view is that FY19 we should see 16 to 18% growth as far as earnings are concerned.
All right.
Nifty 50 and Nifty 500. I've just chosen that because it's a slightly broader index. They've returned close to 30 and 36, 37% so far in 2017. And you also spoke about how the underlying factors are improving as far as 2018 is concerned. So just want to understand if you believe some of these indices could give similar or better returns next year.
Oh.
I know it's a very short-term call when it comes to mutual fund investment.
So, yes, 2017 has been a great year for Indian equities. In fact, not only for Indian equities, for global equities, So wherever you go, whether it's US, which has given 25%, or Hong Kong, which has given more than 30%, I think across markets, you have seen very, very decent returns. As I said, volatility has been low. 2018 is not going to be as great. We'll have more volatility. We are coming out with a high expectation and high base effect. Our view would be that Indian equity markets can give you double-digit returns, but to expect the returns which we got in 2017 would be something keeping your expectations too high. So I think we have to keep our expectations moderate. If we get higher returns, well and good, but we do expect mid-teen kind of returns to be the base case as far as 18 is concerned.
Based on your outlook on the markets then, we'd like to know what are the risks that these markets are not factoring in right now? It could be domestic or global.
So as I mentioned, 2017 was a fairly stable year, low volatility globally. 2018, definitely there will be more volatility. There is no doubt about it. So I think we have to be prepared about it. Also, global markets have all moved up in sync. There is always a possibility some event happens in the world, and that would also impact India. We have to be prepared about it. And I think now in India, you can't have a scenario where corporate profitability doesn't move up. So if you have a couple of more quarters where corporate profitability disappoints, then these valuations cannot sustain.
Right.
So I think these are some things which you have to take in mind. And the other thing is that once the election gets nearer, we have seen in the past that markets will get a little cautious, a little jittery, and we will see that towards the end of 2018 also.
Well, that's a battery of ideas and conversations, but what we need to do right now with the markets looking absolutely flat is take a break, but discuss what's in store in 2018 for IT by and large. Tech Mahindra, of course, have their own Mission 343 as well. So we'll discuss that too with Managing Director, Mr. CP Gurnani, and then take a stock of Tata Global Beverages new launches in 2018 with MD and CEO Ajoy Misra.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
We're back with Indian Open right here on Bloomberg Quint. It's a flattish start to the trading day today. The Nifty 50, as I see the numbers, 10,495, so absolutely flat. No such luck for Nifty Bank either, which is marginally off. The question mark is whether Nifty IT is doing slightly different, because the last 2 or 3 sessions, these stocks have done rather well, though in today's session, fairly flat. But a lot of reasons to speak to a very special guest, Mr. CP Gurnani. Remember, let's try and talk about the implications of Accenture earnings and whether they convey something that other companies haven't conveyed already. There is also the Mission 343 that we need to talk about with Mr. Gurnani and try and get a sense of what this would do and differentiate Tech Mahindra over the course of the next 18 to 24 months. And of course, there is a news at hand, additional stake purchase in Combivast. So much more to speak about. Mr. Gurnani, good morning. Thanks so much for joining in, and festive greetings to you and the entire Tech Mahindra team from all of us at Bloomberg Quint.
Happy greetings to all of you also, and thank you for having me here.
I know, it's a pleasure, Mr. Gurnani. I could start off with the news at hand, or I could start off with the big picture. I leave the choice to you, or if you leave the choice to me, let's start off with the big picture.
So Neeraj, clearly 2017, we started with a lot of apprehensions. 20th of January, President Trump was sworn in. There was a fair amount of, I would say is anxiety or a concern with many of the global economies about the shape and the direction that the US economy will take, or more important is, will the protectionism change the way the businesses are conducted globally? I personally believe as we start now towards at the end of December here, the US economy, all the macroeconomic growth indicators are looking very, very good. And clearly we have a, hopefully a new Fed chairperson. The tax bill will become a reality. And if the US economy continues to do well, I do believe that the global economy can start looking at approximately 3.5% growth. And if India is at 7% growth in 2018, and if India is going to become the 5th largest economy over a period of time, I think we are talking about Indian IT industry prioritizing, Indian IT industry rejuvenating themselves or rebooting themselves, and Indian IT industry also taking into account that it is not the Trump factor which is changing our business, it's actually the technology which is changing our business. As long as we can balance the changing requirements of our markets, I think we will be in good shape.
Okay, let me quiz you on that very topic. And in fact, since you brought up the tax bill, we'll talk about that too. But if I look at what Accenture's numbers indicated, they indicated acceleration for them in the US and the financial services space as well. US remains a large portion for most of the IT companies, including you as well, fairly reasonably large portion, about half of your revenues, I believe, as of the September 17 numbers coming from the Americas as well. Tell us about how US is shaping up and how do you expect calendar year 2018 to be like. Also, part two of my question, Mr. Gurnani, if I may, is whether this tax bill changes anything. We had some tax experts speaking about how Indian companies might also want to show a lot larger profits in the US because of the tax implications thereof.
So the two parts, one is how are the companies doing in US? Clearly, they are the leaders, the global leaders of the economy. They will get an impetus, whether because the corporate taxes are getting reduced or whether the money that is lying in few of the other countries will flow back. The profits that are not being actually mobilized in the American economy can now be mobilized. There is a clear correlation between the money velocity and the overall economic spending that will happen. I strongly believe that Indian IT will benefit from the American spending. Accenture and many of us, to be very honest, have played the world a little differently. We have anticipated the change. We are more digital than others. And if you're more digital, if you're more automated, if we are able to create service offerings which are near the customer, and when you talk about 343, you're talking about 3 global trends in the market, 4 differentiated service offerings, and how they benefit the customers. The 3 of the end is about customers running faster, customers being able to change faster, and the customers being able to grow faster. So as long as we remember that our customer's customer is changing, and if we can help our customer change, I think we are in good shape. And Accenture results, or even for that matter Tech Mahindra results last quarter, do give you an indication that the world is going to be for fitter and better players.
Yeah, which is why I said that Accenture's numbers, if the other IT companies' numbers in September didn't already convey that message. The question though, Mr. Gurnani, would be that like you are identifying these mega trends and the strategy, that the name that you've given, 343, other companies are doing the same as well, I'm sure. How much of a leg up in growth could come in over the course of the next couple of years? The reason I ask this is because when we speak to market experts, all of them mention that things are going very good for the large IT companies in India in select verticals, but not all. And the mid-cap IT companies are benefiting because each of these companies is but a vertical of what a large-cap IT company is, and therefore we've seen the earnings growth or the stock price reaction to mid-cap IT, which has been exaggeratedly amazing compared to what large-cap IT has been in 2017.
I can only say is that, I have never ever believed that it is large or a mid-cap or a small company which is in a better position to change. Ultimately, some of us were in a conference in Finland, and the conversation was how many of the companies are willing to dare to disturb themselves. How many of us are willing to get out of our comfort zones? How many of us are willing to look at what the new world will look like and then reshape ourselves? So I personally believe it has nothing to do with large cap, mid cap. I mean, large cap definitely has a little bit of an advantage because they're closer to the customer, but a mid cap or a smaller cap company has an equally big advantage that they can be faster and more nimbler. So I would still strongly like to say is that change is in front of us, that the world around us in 2018 or in 2019 is going to go into more exponential changes, and it's for us to grab that opportunity. It's for us to take advantage of that seismic changes that are happening in the industry.
Would this need companies such as yours, not just you, maybe yours, but let's probably talk about Tech Mahindra. Would this need Tech Mahindra to have unforeseen or hitherto not committed expenditures in order to either get manpower to understand these changing technologies better, or to deploy newer manpower which is more nimble in these said newer technologies across the world, and therefore incur higher costs in the intermediate term? Is that something that is a given?
So Neeraj, again, I try and do my budgeting with everything that is known in front of us. As I said, we discuss US, we all know that Europe, there will be some changes. I mean, it is not that the Brexit will have no impact, or for that matter, the new Global Data Protection Act will have no impact. So we have taken a lot of things into our budgeting and planning. We have taken into account how Saudi Arabia has unfolded their vision for 2030. We have taken into account that some parts of the world will remain a little bit volatile. We have taken into account our presence in Brazil and how things are changing there. We have a significant presence in Philippines, and we are watching what's happening in Philippines. So I would only say is that we do take into account the geopolitical changes. We do take into account the technology changes. I don't expect there will be many surprises if you do the budgeting with a level of anticipation about the changes on geopolitical world and small changes that are expected on the technology side. From overall, will there be something unforeseen? Frankly, I would be surprised if nothing happens. Question is, what is that? And I hope we are resilient to take into stride some of the changes happening. I mean, solar energy will take over fossil fuels. I mean, yeah, welcome.
Yeah, I know. That was the talk whole of 2016, probably 2017. Bitcoin is now ushered in new conversations as well. Mr. Gurnani, my final question to you, because I'm sure you would have a busy morning as well. And I know the reason why unforeseen is called unforeseen is because you can't see it right now, and I'm sure you'll be able to navigate it well. Keeping in mind all the scenes and some possibilities of unforeseen technologies coming in, which is always the case in a business like yours, would it be fair to assume that there is a higher probability of a large company like yours moving on closer to double-digit growth rates, if not in the next financial, then the year after that? Is that a possibility, or is it too difficult to forecast that currently?
So two reasons I will not forecast. The one reason is that it is not that many of us don't want to be in double digit, but we also have to take into account that the current technology also means that there is a lot of code development which is happening along with the client at the client location. Today, there is a shift happening from a factory model approach to now code development with the client. And honestly, it is not about us being ready. It also means clients being ready. It also means countries being ready. It also means skills being ready. And unless I'm able to get into that ecosystem, I don't think it is only about us being able to grow. It is also how soon can we all build that ecosystem with the local universities, with the local government, with the local customer base and Tech Mahindra kind of companies willing to evolve as we go along.
No, I think that's a fair summation, and we'll keep this in mind next time when we talk about whether growth can be forecast or not. I'm guessing it's very, very difficult. But I do know one thing, Tech Mahindra is in safe hands. Wish you all the best for the new year. Mr. Gurnani, thanks so much for joining in today and giving us your thoughts.
Thank you, Neeraj. Thank you, and all the best.
That's CP Gurnani of Tech Mahindra. Well, they've been trying to do a lot of things. I think they outlined a lot of new strategies that Mission 343 in a recent analyst meet as well. The only question is the valuations. That the company's been doing well is seen every sporadic quarter wherein they come up with a surprise. The question mark only is the valuations, wherein a lot of analysts believe that paying 15 times, Rahul Arora was speaking about it just a while back, paying 15, 16 times for companies, not just TechM, but companies which are growing at 6, 8, 9%. Is it fair valuation? And maybe, just maybe, the financial community believes that it is. So may not be terrific upsides in the near term until the growth numbers come roaring back, which are difficult to predict right now. However, moving on from Tech Mahindra to tea, coffee, and a lot of other things. It's the world's second largest tea company, has an interest in a whole host of other beverages, including coffee, as I said, mineral water. It's got tie-up with global players like Starbucks, are also slowly paying dividends. Joining us now to talk about new launches and the targets for the new year is the MD and CEO of Tata Global Beverages, Ajoy Misra. Good having you, Mr. Misra. Thanks so much for joining in. You're amidst a massive restructuring exercise, especially for your international businesses, which are unprofitable. Can you shed some light here? Timelines, the extent of restructuring, the post-restructuring model?
Indeed, our in-market performance for the last many quarters has been positive, and it has been the result of several strategic areas that we were working on in the company, both in terms of existing businesses, in terms of portfolio of businesses rationalization, as well as investments that we were making in certain businesses, finally turning the corner, and of course a very comprehensive cost management initiative that we had also put in. So I think a combination of all of those factors working, something that we were sharing with the analyst and investor community in our earlier interactions over the years. I think we can see the fruits of that happening, and that's what's brought us into this position. Neeraj, happy to answer any specific area you want me to talk about.
Well, I just first want to talk about this focus on turning around or selling loss-making entities, saving costs, and a thrust on the new growth opportunities, Mr. Misra.
Yes, up till recently we were focused fairly strongly on tea as a company. In fact, tea is still 75% of the company's business. However, we have decided to look at India in a much bigger way, and it is in that context that we have been saying we will look at adjacencies and other categories. In fact, you will already find evidence of some areas in market. For example, other than tea, we entered branded coffee in India over a year back. We have thereafter 6 months, 6-7 months back entered into RTD by launching Fruski, our green tea based instant tea. And thereafter, even outside of India, we have decided to try our hand and have piloted RTD plays in Canada. We have a Tetley iced tea RTD that we have launched, and it's on shelf already, doing fairly well. We have also in the UK talked about entering RTD, and we've under the brand name Tetley, we have decided to enter the squash category, which is also in a PET format. In Australia, we have launched a pilot RTD product called kombucha, which is a very emerging category and a growth category of RTD. These are examples of RTD, extensions to our basic hot tea. Similarly, in India, in Bangalore, a month and a half back, we have opened our first pilot store for retailing tea, and it's under the brand name of Tata Cha. So we are looking at the retail format where the proposition is based around giving you the the kadak chai, the kind of chai that the Indian market likes. So it's a proposition of a chai-based outlet. It also, of course, has foods alongside. That's another example of adjacency. Under the Himalayan brand, we have gone beyond still, and we have entered the spark, and we come out with the Himalayan sparkling version, and thereafter we followed it up with a Himalayan flavored drinks, and the Himalayan flavored, for example, waters are all based on natural flavors of Himalayan fruits such as apple, peach, and strawberry.
Yeah, but Mr.
So
Misra,
these are examples of some categories that we have recently entered into.
Fair call. But let me ask you the impact of all of these categories have on different business verticals. So how would these verticals of tea, coffee, plantations grow for the next few years? Would the shift from unorganized to organized theme work for your tea and coffee businesses as well?
Yes. Yes. If you take the tea category, we believe roughly half the total tea being consumed in India, roughly, is branded. That means there is the other half that is unbranded. And for sure, there is a conversion happening from unbranded to branded. So that certainly is playing a part in our going forward. And this year already, if you study our standalone results, which reflects the India business, you will find that we weathered the demonetization and the GST pretty well, and we are showing fairly good growth, and the margins are healthy. And we expect that in our quest for growth, we will continue to keep our eye on margins, and I did mention that we are, we are, also reaping the benefits, and it's ongoing, of a very robust cost management set of initiatives. So I expect growth to be profitable growth.
Okay. You expressed intent to enter into newer categories other than tea, coffee, and water, and have not ruled out pooling group resources across consumer businesses, especially for more premium brands as well. Can you elaborate a bit on that?
Yes. So you're right. In fact, premiumization and a high focus on innovation are also pillars of our strategy that is pretty much playing off. So almost every new NPD that we are launching is steadily premiumizing our portfolio. So that is pretty much a key pillar of the strategy.
Okay, and any updates that you can share from the various JVs and acquisitions made in the recent past?
Yes. So I was mentioning that some of the investments that we've been making in incubating businesses or markets have come to a point of turning around. And both are JVs in India. I'm happy to say Tata Starbucks as well as Narishco, both have shown very good growth recently, and both are now, instead of being in the mode where we were investing and therefore having to incur the cost and bear the losses, they are turning around the corner, and I think we are very satisfied with the kind of growth that we are seeing in both our JVs.
Okay, and we wish you all the best for both the JVs and other businesses to continue well. Mr. Misra, thank you so much. Afraid we'll have to call it a day here because just out of time completely on the show, but really appreciate you taking the time out and being with us. Okay, just before we wrap up the show, just need to quickly mark what's happening to the markets. Precious little. Now, maybe TCS is up and about, maybe GAIL and ONGC are doing well, but otherwise don't see too many stocks really setting the stage on fire. TCS too has come off from the highs of the day. GAIL marginally higher, ONGC maybe marginally higher, but that's about it. Watch out for DB Realty, GVK Power and some of the mid-size names. Those are the ones that started off really well and likely to stay up for most part of the trading day as well. But with that, it's a wrap on this leg of Indian Open. A lot more active stocks in the futures and options space in particular being discussed on the other side on the FNO show. Do stay tuned to Bloomberg Quinn. Thanks so much for watching Indian Open.